recipes for technical trading success in Cook's Kitchen.
How do you spell bubble? A lot of investors want to spell it FANG, or maybe even Nasdaq right now, Nasdaq. And I don't blame them, right? This thing has screamed higher. The Nasdaq 100 is 8% above its 50-day moving average. That's a rate of ascent I don't particularly care for as a technical trader. But we're going to look at what's driving this besides FOMO. First of all, let's take a look at my price chart. Here is the Nasdaq 100, and if you just do this math from 88.80 up to 9,600, that's over 8% extended above its 50-day moving average. That's rare. That's why I use that for a marker. Back in November, actually back in September, let's look at September. In September, for Zacks Ultimate subscribers, I did a special strategy session, and I said, if we get above 8,000, this thing is going to 9,500. Well, here we are. And now 9,500 easily gets you 10,000. I mean, we could be talking about NASDAQ 11,000 very soon in the next 12 months, maybe. So, is this just FOMO? That's really the question. And I say that it's not, with the caveat that my number one secret of Wall Street is they have to buy. Investment managers with cash coming in have charters. Money is earmarked for stocks. That is what they must do with the money. They can't sit in 30% cash or even 20% cash. All right. I want to tell you about an interview I did yesterday with the managing director of equity research for Wedbush, Dan Ives. Dan's been on the street for 20 years. He's actually worked for technology companies. He's been very focused lately, this decade, on the cloud and cybersecurity. He nailed Apple and Microsoft 2 years ago. Remember when everybody was throwing Apple out with the bathwater in that Q3 report in 2018, where growth was going to slow. China was slowing dramatically, and the stock during that big washout we had in December of 2018, they took Apple down below 150. He was the street high price target at the time. He was at $310 on Apple. He actually had to come down to be realistic and say, okay, we got a re-rating here on valuations and growth. But he kept his targets in the 200s and then slowly raised them as Apple recovered. I did a podcast with him yesterday, interviewed him for about 15 minutes. We talked about that stuff and where he stands now with Apple, with the street high price target now of 400. He was the first one to go to 400. Let me show you where to find that podcast. So it's actually not published yet, but the Mind Over Money podcast is here. Here's the archive. You can just search me and find it. There's, stock tickers are going to be there. Look for a small one like AYX. Alteryx is going to be in there. And then you'll find the podcast. All right, let's look at Dan here. I just Googled him on YouTube, so you can catch a couple of his recent appearances. This first appearance is like December 16th. Yeah, that's when this is. Let me tell you what Dan did on December 16th. So they called him in at CNBC. He must have written a note that morning where he's saying NASDAQ is going to launch higher. And the reason he said so is because on December 13th, we had a big resolution in the tariff tit for tat, right? The U.S. basically backed off and everything was going to be nirvana on the trade front. And he said, you know what, that gives a free pass to stocks. And I had already said in November that the Fed gave a free pass to stocks. We could have this rally to S&P 3,500 in the first half before the election. Well, Dan was lighting the fireworks on December 16th. He said, NASDAQ is going to have a 5 to 7% rally. Well, I just did the calculation. We got over 12% in the NASDAQ from that call on December 16th. Then he was back on there not too much long after, looking back at my screen here. Oh, room to run. He was back on there like the next day, I think, talking to Dominic Chu. And because, they just wanted to hear more from him. And he went over his tech predictions for 2020. And I got them right here. because he and I talked about several of them. Let me just list a few here. So the reason he's so bullish on Apple and has this $400 price target is because he says we're coming into the 5G supercycle. So and Apple is going to dominate the 5G supercycle. His number 2 prediction, that the FANG regulatory headwinds will result in fines, but no business model changes. What does that mean? It means that Washington isn't going to break up Facebook, Google, which would be the top 2 candidates. Doubtful they would do anything with Amazon, Apple, or Microsoft right now. But definitely Facebook and Google, we know, are in the crosshairs for some type of regulatory action, but it might just be fines for this year. And so with that kind of foresight, you're seeing institutions buy these shares up. I just came out of a meeting where we were looking at the SEC 13Fs, the quarterly filings of hedge funds and institutions, and was surprised to see all the big buyers of Facebook. Now, big name funds, big institutions, Vanguard, BlackRock, adding to their already large positions, obviously indicates that they don't see the winds of change from the Beltway in the 202 area code, denting these business models right now. Let's look at a few more of Dan's predictions here. Number 3, Tesla will find success in China with Giga 3 and potentially hit the 100,000 delivery mark faster than anybody expects. So if you believe that, if you're a Tesla bull, we've talked a lot about Tesla here. This is Tesla executing faster than anybody expects and getting through the speed bumps. Once they got the formula down in Fremont, California at that car plant, if he can reproduce that success in China and eventually Germany, that's why the CEO of ARK Invest, Catherine Wood, has her most bullish case, her extreme bull case, is a price target of 15,000 on Tesla shares in 5 years, in 2024. Now, her base case is 7,000, and that's on not only production of the vehicles and demand and penetrating the traditional car market where they only have, is it 5? It's less than 5% penetration right now, for sure, yeah. If they only delivered 367,000 vehicles and there's 90 million sold worldwide. But it's also based on the robotaxi idea that if they can dominate with autonomous driving combined with ride hailing and then have that 80% gross margins on that business. All right, other good predictions from Dan. That Microsoft will continue to win the next stage of the cloud wars versus Amazon. What else stands out here? Oh, he sees FANG. This is another reason that the Facebook, Google, Amazon, Microsoft are being bought, is that they're going to expand into new verticals like banking, healthcare, and transportation, automotive. So when these monoliths with the cash war chests that they have decide to go into these new verticals, they're first of all, it's long term, and there may be some failures along the way, but overall, they're probably going to have some success. Another interesting insight from Dan, a specific prediction for Google, is that GCP, which is Google Cloud Platform, it's behind in the race versus AWS and Azure, is going to need to possibly make a major acquisition to catch up. So that's one of his predictions, is that GCP makes a major cloud acquisition to catch up to Azure and AWS. I'm hoping it's one of my small companies like Alteryx or Elastic. I don't know if they'd spend $30 billion for Splunk. Probably not. Because when you look at, I've always looked at the M&A here, when you wonder why you don't see more big M&A from a Google, Apple, Microsoft, Amazon. Yeah, maybe you see some $5 to $10 billion deals, but you don't see any mega deals because these guys can take $2 billion of their own money and hire 100, 200 engineers and build it themselves, much cheaper than paying a premium in the public markets. All right, what else from Dan stands out here? In this article, by the way, I'll have all the links. I'll link to the podcast, other cool stuff. I'll review Dan's points. So if you're watching this on YouTube, head on over to Zacks.com. I'll try and put the link in the comments below on YouTube. But if you find the article version on Zacks.com, I'll have much more detail, flesh out stuff and have important links. All right, let's do a couple more predictions from Dan Ives of Wedbush for 2020 that I think stand out. The streaming wars, this is prediction number 5. The streaming wars will result in clear winners, losers, with Disney and Iger, the juggernaut, could disrupt 10% of Netflix's installed base. Speaking of installed bases, that's the key concept I left out about why Dan stayed bullish on Apple in late 2018 and early 2019, was that, okay, they're selling less units, and Tim Cook, sort of shifted the narrative away from units sold to what is the installed base. Now that you've covered a significant part of the middle class with iPhones, that installed base is not only a source of revenue for services, but it's also part of the upgrade cycle, right? There could be as many as 350 million phones, he estimated a year ago, that would be upgrading in the next 12 to 18 months. And now, after their most recent report, you're starting to see that kind of traction. Over, was it 58 million phones? I'm not sure, but the traction is there, the ecosystem is there, the innovation is there. All right, one more prediction from Dan here. Let's find the best one. Cybersecurity. Okay, so he says 2020 will be a year of consolidation in cybersecurity. I know CyberArk is getting crushed this morning on their report. I own CrowdStrike. Could be an acquisition target, but there's so many to choose from. Proofpoint, Fortinet, Palo Alto. I think his favorites are CyberArk, Zscaler, and Palo Alto. Zscaler is interesting here. All right. So check out, find the link if you're watching this on YouTube, so you can go to Zacks.com, get the article version, get all the notes from Dan. Also a link to the podcast if you want to listen to him talk about his thesis. He's got a lot of great ideas, and he's the reason I had him on the podcast, which my podcast is about behavioral economics, is I wanted to talk about how do people miss this stuff for the long term. You say you want to be a long-term Apple investor, but you're trading in and out of it, getting scared out, when it's down 20%, and then not being in it for the ride back up for the long-term future. Because that's the thing, when you sell a stock, let's say you owned Apple at between 150 and 200, and then you get spooked out of it because, oh my God, we're at peak iPhone. That's the end. They'll never sell more iPhones than this last quarter, and you don't understand the dominance. Then you go ahead and get out, and you get out flat or with a tiny profit. Now you have a dilemma. When do you get back in? When is the growth story revived enough that you get back in? Throughout 2019, that was the challenge as an investor. And so that's why I had him on the podcast to talk about that. Same thing with Microsoft. They've just been phenomenal investments. So I asked him about that stuff. Oh, and then we opened talking about the Nasdaq, how overbought it is. Yeah, is it due for some type of pullback? Of course. I thought it would be coronavirus. Coronavirus hasn't really blown up the way it could. We could get a surprise one weekend or Monday morning where it turns out there's 300,000 cases confirmed, and it's spread in places we don't know, and the fatality stats are higher than we've been told. That sort of thing. That could be a shock. That'll be a buying opportunity. Right now, if the FANGs go sideways, that would take some pressure off the Nasdaq and let the 50-day moving average catch up. But you still want to be buying stocks here because I think we got a clear runway to rally in the first half. Dan is calling for, let's see, so he called the 5 to 7% rally, and we got 12% out of him. But I think even in January he was saying, you could see another, another 10 to 15% in the next 12 to 18 months. So, and that's based on the themes we've talked about. And so check out the podcast and you'll learn more from him. All right, that's it for the kitchen. Thanks for joining me. See you on Zacks.com.